morning, everybody. This is Yohay Elam of ForexCrunch.com and Market Movers doing the live morning show for FX Street. Today is Friday. Thank God it's Friday, October 9th, and we have quite a lot of movements on charts. So I want to welcome everybody in the room here. Yu, Berman, Jack Sarwild, Albert, whoever is here. As always, we'll talk about recent developments, charts and levels, what's going ahead in the next few hours, and most importantly, looking forward to your questions. So yesterday we had a minute meeting day, let's call it this way. We had a rate decision from the Bank of England. They were relatively dovish. That means they did express some worries about inflation and the pound lost some ground, but then it turned around, at least against the US dollar. We had the ECB. They were also dovish. They were also seeing more downside risks to inflation, but they still. Just a second, we have some noise here. Today's Friday. Sorry. Okay, so we had these developments from the Bank of England, the ECB that was relatively dovish, and then we had jobless claims, which were actually better than expected at 263,000. But finally, we had the FOMC meeting minutes, which were relatively dovish, and this sort of sets the tone. So let's show you the chart of euro-dollar, which is, as we speak, making a very nice move. We're seeing it finally break about this downtrend resistance, the triangle that we've been talking about. So we're seeing it at 113.40 at the moment. It's already almost touched 113.50. And yesterday, if we had a sort of false break, was unsure that it's real, this one looks much more convincing, okay? The downtrend resistance line accompanies us since the swing high of August, and then 114.60, which is a critical resistance line, and that was challenged in the last few days. So now we're seeing a much more clear breakout. Next resistance line is 113.75, and then 114.60. Okay, on the downside, we have 113 and 112.15. These are, of course, important levels. And that's, if we look also at this chart right here, we also have it sort of without the resistance line. It's also, you can see that it was hesitating. Euro-dollar was sort of not so sure where to go, but now I think it's real. First of all, before we had the euro-dollar move, we had moves of commodity currencies. We talked about that during the week. Yesterday, part of the commodity rally went sort of lost some steam, but now it's more significant. Okay, so before we move to the other charts, let's talk a bit about what's the biggest driver, and that's the Fed. That's the meeting minutes. Okay, so yesterday we had minutes from the Fed decision in September. The decision was held on September 17th. The Fed decided at the time not to raise rates. It cited a weak, strong dollar, a weak global economy, lack of confidence about inflation, and they wanted to see more evidence of improvement in the labor market. Now, since then, we had two things. We had a speech by Janet Yellen saying that September was a close call. And the second thing that we already know, we had a terrible NFP. So markets were looking, okay, so maybe jobs weren't so good, but maybe it was really a close call in September, and it's good they didn't make it because it would have been a mistake. But we're going to see a move quite soon because it was a close call. And what we've seen yesterday, that it wasn't a close call. Members were hesitating. Some wanted to see higher rates. We know that immediately. We know that Jeffrey Lacker voted against. But in general, the notion was that most of the people were still on the fence, still hesitating. I still see a good chance of a rate hike in December. But after these meeting minutes, we would need to see the data dependent, the figures improve quite a lot for that to happen. Okay, so we had problems with global economy were echoed once again in the minutes. Problems about the strong dollar, everything, a lack of inflation. One member, Naranya Kocher-Lakota, even talked about lower inflation for longer. And what do you do in such a case? You even cut rates to negative, something like the ECB did. Okay, so that's the main driver of the dollar lower. it's not against all currencies. Let's put the chart back on. So first of all, we had commodity currencies rally. Then we had now the euro. Let's start first with the currency that's not moving. Yes, it's dollar yen, hugging the 120 level once again. Didn't really react to the meeting minutes. I think around every morning we talk about this. It's either 20 pips above or 20 pips below this level. And we're seeing the same kind of reaction. Because also in Japan, the Bank of Japan is set to perhaps introduce more easing. And in general, we have a positive atmosphere now in markets. The stock markets are rising. China is not collapsing. The ECB is set to print more money. The Bank of England is not set to raise rates. And the Fed is also dovish. So with all this going on, stock markets are moving up, and there's more markets are looking for more risk in commodity currencies. And that means that the safe haven yen does not see demand, exactly like the US dollar. So the bigger levels to watch here are 120, 120, and on the downside, 118.70. But as you see, the ranges are much tighter than that. So this week we had dollar yen at around 120.50. And the lows were maybe 119.50, so it's just 100 pip range in the good days. Yeah, but let's talk about more exciting currencies yesterday. Bank of England. So let's look first of all at the impact of the decision. The Bank of England decided not to raise rates. That was, of course, totally expected. And we've seen this kind of fall here in pound dollar. We've seen it fall eventually under 153 because not only did they decide not to raise rates, they voted in the same pattern, 8-1, 8 against to move only one Ian McCafferty for move. And they expressed some concern about inflation. They were less confident about inflation, so they decided to see the glass half empty rather than the glass half full. Okay, so it seems like they ignored rising wages in the UK, something that isn't shared with the US, but salaries in the UK are rising 2.9% according to the recent figure. So it's they probably wanted to put some more pressure on the pound. One of the things they did say about the pound was that the past appreciation of sterling also weighed down on inflation. But that isn't so new. They said that in the past as well. Anyway, we saw pound dollar falling, but then quite quickly, right here, we saw it rise back up again. It's another sort of not a safe haven, but not a risk currency. It's moving a bit slower. It's hesitating under 154. The high so far was 153.83. Now let's move to the currencies that move. So we had a first break in dollar CAD under 130, and then we saw it rise back up to 130.70. I think there's much more excitement in CAD today than the yen, for example. And then yesterday we had with rising oil prices, with WTI crude rising above $50 a barrel, we've seen dollar CAD fall once again, stronger Canadian dollar. The low so far has been 129.60. If we move to the switch to the daily chart, we can see that we haven't been in this level since when's that? Well, early August, right? And even we had a dip towards levels just seen in July, so it's sort of around a 3-month low for dollar CAD. And after this big rise here, then the gradual rise, then the 11-year high for dollar CAD, 11-year low for the Canadian dollar at 134.60, we're seeing long days of fall. So in the last 1, 2, 3, 4, 5, 6, 7, 8 days, we had only 1 day of rises in dollar CAD. The direction is quite clear. It's very highly correlated to oil prices. It isn't correlated to data that we've seen in Canada, like low building permits. And today we have important jobs figures in Canada. Okay, so while we're talking about the Canadian dollar, let's do some kind of preview. Here we are. Canadian dollar, I have quite a few figures here. First of all, the net change in employment or employment change, we're expecting another gain of 10,000 jobs. Last time it was 12,000. More of the same in Canada. all in all, not too shabby. The Canadian economy is expected to gain more weight and more jobs. The unemployment rate is expected to slide from 7% to 6.9%. But as it always depends also on the participation rate. We don't have official expectations. They stood at 65. No, we do have at 65.8. Just to remind us, in the United States, it's 62.4, so 3.5% lower in the US. Anyway, this is a big focus for today, the main event. Canadian jobs figures. The most important figure is the net change in employment. If it's negative, perhaps we can see dollar CAD rise above 130. If jobs are lost in Canada. But if we have more or less as expected, I believe that the trend could continue and we can see dollar CAD falling. Good morning, P. Is it Pan? Pan asks, or P asks, oil prices moves are very confusing. Any way you gauge these? Well, they are confusing because there's, like in every market, lots of speculation. There's been one of the things, of course, it's all sorry, of course, also here related to fundamentals. We had a report that OPEC and non-OPEC countries are meeting, perhaps to cut production, perhaps to collaborate. So maybe if Saudi Arabia and Russia and Norway and other countries decide to produce less oil, perhaps we can see rising prices. But I believe that there's still a glut of oil. There's still too much in production, and that we could see oil prices come back down. Okay, of course they're confusing, but there is this trend. If the Federal Reserve is expected to leave interest rates low, if the ECB is expected to print more for longer, then we have more money floating around, and we have more demand for oil. Even though we've seen this week that inventories of oil are actually going up, which is supposed to be negative. So I hope this answers the question. The moves are confusing. As always, there's lots of noise amid the news, but there's also real things moving markets. So the Canadian dollar did enjoy the rise in oil prices, WTI above 50, but now the focus shifts back home to jobs. Like in every country, jobs are very important. This is true also for Canada. Okay, so let's move back to the chart. Let's see where we are here. Dollar CAD, currently 129.78. We've been around 20 pips lower already. Let's shift back to the hourly chart. And the Australian dollar, also here we had a nice break. So we had this post-Fed high of 72.77. And now, well, first of all, we're just above this level at the moment. And we reached a peak of 73.06. Okay, so here we can see things better. Here in mid-September, this is the post-Fed high, 72.77. We had the pair falling back down. Here we can see this double bottom that I've talked about of 69.35. Struggle around 70, and the move back up, very nice move with a small correction, and another move higher. Next level to watch on on Aussie dollar against the US dollar is 74.40, and then 75. Okay, and higher above, of course, the sky's the limit because we fell so much. On the downside, we have the round number of 72, and then 70.90. Okay, so the Aussie dollar is also enjoying this stuff, also ignoring local data. In Australia, we had home loans rise, but well below expectations. They were expected to rise by around 5%, and they rose by only 3%. That's how we, but now the focus is on, well, Chinese stock markets are rising. The Fed is expected to leave rates lower, and everything looks good. So the Australian dollar is rising because of these figures. Okay, let's move to the Kiwi dollar. Also here, we already crossed the 67 level, which is, I think, resistance. So far, I see it as a false break. Also here, we saw Kiwi dollar rise from support at 63, 64. We had a struggle, then we had a nice move up, each time with a small correction with a small bounce, consolidation, and another move higher. We had earlier this week milk prices rising almost 10% in New Zealand. That's, of course, positive because the country exports a lot of milk. And also this risk-on rally, the positive move in markets, is also helping. And we have 2 questions from MRC and Sharon. So first question, can you please explain the glass half empty and what does it mean exactly? Well, first of all, that's just an expression. The expression, I think it exists also in other languages, not only in English, that, when a glass is half full with water and half empty, or with beer or wine or whatever you want, then the optimistic person, when he sees the full part of the glass, he sees this glass of beer, half a glass, but it's still beer in there. So that's an optimistic view. And that's how markets might be seeing things now in terms of what's going on in markets. When someone sees a glass half empty, that means he's pessimistic. And that's how I think the Bank of England now looks at things, looks more at the glass half empty, at the fact that, for instance, services PMI was disappointing, the fact that inflation isn't rising. It doesn't look at the full part of the glass, which is that wages are rising. So I hope this answers the question. And the question from Sharon is, could you please have a look at Kiwi, please? Oh, okay, I just covered that right now. So I guess, I hope it answers your question, but if you want more details about New Zealand dollar, I'll be glad to answer them. Let's look back at the chart of the Kiwi anyway, and continue with what we have today. Okay, so the Kiwi seen quite a big fall over time. 67 is a clear line of resistance. I don't think we have a confirmation of this breakout still right there. Okay, let's go back to what I've prepared for you. So we talked about the Bank of England's glass half empty, ECB meeting minutes, which were also relatively dovish, but it only temporarily hurt the euro, and then jobless claims, which didn't have a big effect. They were better than expected, but within the range, 263,000. And the Fed meeting minutes, which were relatively dovish. We talked about that more in detail. Okay, so recent developments in general, commodity currencies are on roll. The Chinese stock market returned from the holiday, and it's doing all right. It did more of a catch-up with other stock markets and didn't resume its falls. Doesn't mean that cannot happen. And we have talks about Greece advancing in the background. We have some more numbers. It seems like the European Union is willing to provide some debt relief. At least they're showing positive noises, talking about capping debt servicing costs to 15% of GDP, but this is just early talk. But at least there is some talk in the air, so it's a bit more optimistic. And let's see what we have today. So in around 10 minutes time, we have trade balance from the UK. And let's see if it will impact the pound. Let's just take a look at the levels before. Let's put the half-hour chart so we can see the full impact. Okay. Relatively stable, 153.66. Resistance, 154. Support, I would say 153.40. Anyway, let's see how it reacts. Let's see what we're expecting in the UK. We're expecting, well, the goods trade balance is expected to show a deficit of 10 billion. This is the important figure, 10 billion pounds after 11 billion last time. It's quite choppy, as you can see, but recently it was disappointing. Worse deficit means less support for the currency, okay? And, well, we have other related figures there, but we're focusing on the headline number. Then we have at 12:30 the Canadian job figures. We talked about that beforehand, expecting 10,000 jobs gained. At the same time, we have import prices from the United States. It's a secondary inflation figure. Let's just see what we're expecting. So in the US, we're expecting month over month. We don't have official expectations, but last time it was a big drop of 1.4. For September, I guess we'll see another fall. And year over year, 11.4 fall in import prices. That's, of course, because of the stronger dollar and weaker commodity prices. And more events for today. We have Fed Talk. We have Dennis Lockhart. He's from the Atlanta Fed. He's sort of in the middle, but leans to the hawkish side. I believe he wants to raise rates in December. And then we have later Charlie Evans of the Chicago Fed, and he's a known dove. If he talks against raising rates, it's of course not news. Now I see we have more questions. I have a question from Sharon, a comment about the Kiwi. I think a correction will take place soon. They are merely punishing the dollar. Yes, I tend to agree. There's this dollar sell-off and commodity rise. This doesn't reflect exactly what's happening in global markets. We have a glut of oil, of copper, and even milk. So I think, yeah, we could see a correction. For the Kiwi, 67 is an important line to watch. And we have a question from Jake, one of our regulars. Thank you, Jake. Jake says this has been a devastating week for FX traders. All the fundamentals basically did not play out this week or went in the opposite direction to what traders were hoping. Not all fundamentals went in the opposite direction or not didn't play out. I think we had a lot of impact from central banks this week, Jake. And then we had relatively more dovish figures. It had an impact, first of all, in the UK, and then in, of course, the United States. Regarding figures that didn't go fundamentally right, if you can mention one or two, I'll be glad to comment on that. Another question from Jake, who would have predicted the NFP and commodities rising? This is very difficult. Well, it can be explained, Jake. The explanation is that when we have a weak non-farm payrolls, what does it mean? It can mean two things, okay? It means the United States is not doing well. All the world is doomed. Commodity prices falling, dollar strengthening. The US is a safe haven. Everyone is going to be the Fed is going to be dovish, and the rest are going to be even more dovish. But yeah, there are these market moods, and this time we've seen, okay, the concept, what markets were thinking was, we have weak NFP in the United States. That means the Fed is not going to raise rates. It means we have cheaper money for longer. It means we can go for other assets around the world. And together with easing from the Bank of Japan, easing from the European Central Bank, let's buy more stocks, let's buy more commodities, let's move away to riskier assets. So that could be the explanation. But there are a lot of these mood swings in markets. Since August, we have a much stronger impact of stock markets on currencies. So I hope this sort of explains it. It doesn't mean it'll stay like this forever. And I talked about the Canadian dollar, how it enjoyed the moves higher in oil. It wasn't exactly the case a few weeks ago. If you remember, the Canadian dollar was falling with oil prices, and when oil prices went up, it ignored it and wanted to hear more from Canadian domestic figures. I think that now with if we have a big surprise to the upside or the downside in Canada, in the job market there, we could have a refocus on fundamentals, on economic indicators, and less on maybe these mood swings in stocks and commodities. Okay, so I hope it made it a bit more simple to understand, but it's not always easy to grab the sentiment. Okay, let's see what else we have. 5 more minutes until the UK trade balance. So in the meantime, let's do a small preview of what's going on next week. So Monday, I'll be here on Monday at 8 GMT as usual. But it's important to note it's a holiday in Japan, the United States, and Canada. Okay, so we'll have thin liquidity. That means we might have exaggerated market moves or hours of boredom and then exaggerated market moves, especially in the US session. Okay, in the North American session, because both the United States and Canada are on holiday. It's Columbus Day. It's the day that Columbus reached the Western Hemisphere or discovered America. Now it's a bit controversial because he discovered it for Europe, but the people there were always there. Anyway, on Tuesday, we have the markets in full swing back again. Trade balance from China. This is one of the things that hurt the global economy, the global stock markets back in August. Now we'll see if Chinese trade balance is, the actual figure is not that important. It's important to see if China is exporting and importing more, or how deep is the fall. So I don't think I have expectations at this moment for what numbers we're expecting. I'll talk about that on Tuesday or on Monday, but it's important to know it could have perhaps a negative impact on the Australian dollar. On Tuesday, we have UK inflation. We'll see, maybe the Bank of England was right to be more worried about inflation. Maybe it's going down. Core inflation, retail price index, these kind of figures. We have on Tuesday also the German ZEW indicator. It's been falling for around 6 months or so, if I'm not mistaken, maybe more. And we'll see if the German, this will actually be the first time we hear from businesses in Germany after the scandal, after the VW Volkswagen scandal. Okay, so we might hear, we might see negative sentiment because it has a huge impact on the German economy. Wednesday, we have Chinese CPI, inflation there, a bit less important, the trade balance. In the UK, we have employment figures. We'll see if wages continued rising, if maybe the Bank of England was wrong to be pessimistic. And then we have also US retail sales. Of course, consumption is critical to the US economy, so that's an important gauge of the economy. It's the figure for September, and it will impact Q3 data. On Thursday, we have Australian employment data, sort of lots of figures to move the Australian dollar next week. And then we have inflation data in the United States. I would say this time a bit less important because the Fed focuses on the core PCE price index. Okay, so, and let's see. No, okay. And we have a few more questions. A question from the Vista. Well, what's up with Looney? This short-term fall, merely a nice correction or rebalancing of the portfolio? That's a nice question. Let's take a look at the chart. Okay, so yeah, we had Canadian dollar in recent days. So it was trading around above 130 for quite some time. After the Fed, it fell nearly to 130. Then we had it rise all the way to 134.60, and now fall, small correction, and then extending its fall. Okay, so I see it as a correction because there's too much oil in markets. The Canadian economy is in a recession, so I see it as a necessary correction. And if the United States is really in trouble and cannot raise rates, it's bad for Canada. It means less American demand for Canadian goods. So I see it as a correction. In the longer term, I think Canadian dollar has still more room to rise. I still think it's correction territory. Here is the peak. Put a better line maybe here. Let's see where I am here. 128.60. I would need to see a convincing fall in technical terms under 128.60, under this previous cap here that we've had during the winter, during the spring, in order to say, okay, we have maybe a change of course, but currently we still remain on higher ground. Okay, so of course I may be right, I may be wrong, but the fundamentals I think still support a weaker Canadian dollar. Okay, of course 1, 2, 3, 4, 5, as I said, all these days of falls is of course very significant, quite a big move, but it still could be in the longer term only a correction. And a question from Jake. Okay, that explanation helps. Just wondering why the NFP was so poor, which got us in this mess. I don't know. Might be related to China. It might be related to China. Less Chinese demand for US stuff, of course, has an impact, or less European demand related to China. It's a bit related. It impacts, of course, business sentiment, the Chinese moves, but it's the poor NFP is also maybe related to some kind of slowdown in the United States. It might be a one-off as well. I think we'll need to wait for the next figure in early November. Jacks are wild. Good morning. Monday is a holiday. Do you think volatility will be higher or lower? Today. So today is Friday. We usually have higher volatility on Friday because it's okay. We have the data out from. I'll answer your question immediately. Trade balance in the UK. Let's see what the figures are showing us. Worse than expected. Deficit in the UK is 11.15, almost 149 billion pounds. Worse than expected, similar to last month. Expectations stood around 10 billion. Let's look at pound dollar on the 30-minute chart. Yeah, pound dollar is falling just a bit from the previous highs. Nothing really critical. I'd say something like 15 pips. Let's see if euro pound is moving the same way. Yeah, the euro is stronger against the pound, and your favorite dragon is also a bit lower. I wouldn't call this move hugely significant. Okay, let's get back to your question, Jacks for Wild. I think volatility will be higher today because, especially in the US session, because traders will try to lock in some profits or eliminate losses, make some last-minute moves because it's a long weekend in the United States. So volatility might be higher in the US session, okay? That might make the move regarding the Canadian jobs release even more important. Okay, Jake, question from Jake. Could you say that the monetary policy trade is now on hold and commodities are reversing too? No, the monetary policy still has the biggest impact on Forex, on currencies. So it's always sort of central banks having the last word. Question from Pan. Are figs out? GDP moving. Yeah. We had the figures out. That's why we've seen pound dollar moving. Sorry, I saw this question just now. And Sharon says RBA is likely to cut November. Yes. Let's look at the calendar and see. This is the FX Read calendar on Forex Crunch. If you don't, I'll show you a bit how to use it. Let's just pick. Well, I guess most of you are familiar with it, but anyway, I clicked here on none just to eliminate all the currencies. And let's look only at New Zealand and filter the results. And let's look at next week, New Zealand. Well, we don't have a rate decision New Zealand next week. I wonder if I can see, date range. Okay, so let's take New Zealand. Let's see when the next rate move is in, let's pick today as the start date, or next week is the start date, and late November is an end date. And let's see, do you have the date for rate decision? Next one is on October 28th. You know, it's the same day that the Fed makes a decision. I believe we can see the Reserve Bank of New Zealand cut already then from 275 to 250. Of course, when we'll get closer to the event and we'll have more data, we'll make a full preview. But as far as I know, the hints that we have now are that the Reserve Bank of New Zealand will cut rates once again. And if we have the current trend going on and the New Zealand dollar moving higher, then we'll have more urge from the Reserve Bank of New Zealand to cut rates, okay? And if the QE falls a lot, let's say it crashes under 62 cents, then maybe they won't be in a rush they'll prefer to keep more ammunition in the pistol, more tools in the shed to keep it for a time that they'll need to use it, okay? So let's see if we have also, you mentioned in November. No, so the next rate decision in New Zealand is in late October. Okay, let's see when the next one. Oh, we have it here actually. The next one. No, I don't have the date of the next one. Anyway, it's going to be afterwards. I guess in early December. So another question from Jake. Yeah, but a lot can happen between now and then. Maybe milk prices up another 20%. Yeah, anything can happen. But I believe that if we have New Zealand dollar at current levels, and the Fed not moving closer to a rate hike. Given all things equal, nothing changes from now until October 28th. That's 19 days from now. I believe the RBNZ will cut. If things get worse, of course, it'll cut, and if things get better, it won't. But given what we know now, I believe they will cut interest rates. Okay, in New Zealand, in line with other central banks. Okay, looking forward to more questions. Let's look at a few more charts. Here we are at pound dollar. We've seen quite a nice rally. Dollar yen, of course, stuck, hugging the 120 level. Pound dollar recovering, I think correctly, because the situation in the UK is better. We've seen it break above this level of currently at 184.40, and sliding back to this line. I find this line as a support because we had here this peak back in September, so this is an important line to watch. The top side we have 186. Let's make it more comfortable here. And on the downside we have 183.50, 183, 182.50. More or less the steps of 50 pips just along the way, relatively even. Of course, this currency pair provides lots of pips, and it's quite interesting. Let's look at other charts that we missed. Dollar Swiss, very stable. Well, moving to the downside, and the dollar weakness at 96.34. Still in the wider range. It's between 95.30 and 98.40. Okay. Euro Swiss, as always, very stable, 109.08. A bit in the lower end of the range, but it's very limited, 108.70 to 110. Euro pound now on the rise. Sorry, now in the last few minutes it's sliding, but we're seeing it in this sort of range here, and it's a bit rising. 74 is resistance, 73 is support. There's lots of trade between Europe and the UK. And Euro Yen, well, Euro is making a break higher, as we mentioned, and the Yen is still stuck. So the Euro is enjoying a positive atmosphere. The Euro is less of a risk on now. Risk off is a risk aversion currency, a safe haven, and it's moving a bit up. That I would call it a break as well, above the 135.60 level. Let's see what levels we can point out to on the upside. This one right here. Which is 137.53. I see we have more questions from Albert. Good morning. Even though pairs like pound dollar just drop like a rock, is it possible for the pound to still gain momentum upwards, or will it keep trending down now? I believe there are reasons for the pound to rise. Situation in the UK is not too shabby. Wages are rising, and the pound was just punished too much, in my opinion. So I think it can rise a bit more. I think the Fed will be the first, of course, to raise rates, but the Bank of England is set to follow. So the pound should be on the stronger side of currencies. I believe it can gain against the euro, gain against the yen, gain against the commodity currencies as well. Of course, in recent days, we've seen a huge rally in commodity currencies, and the pound sort of lagging a bit behind, also moving higher against the US dollar. But all in all, I'm sort of more constructive on pound dollar. Sharon says no one is buying the euro. Well, today we do see buying the euro. Just jump soon to the euro dollar chart, and I see your questions from Tiku. Good morning, and from Mosud. Great to see everybody here. I really enjoy your questions. We did cover euro, pound, and euro yen. Let's refer to what Sharon said. The comment about euro sliding back down, but in general it did manage to break higher above this. Let me show you on the other chart here I have here. I do see it as a break higher. Yeah, euro dollar was stuck, and the ECB is set to print more money. I don't think it'll be. I don't think it'll reach these swing high levels here of late August, but maybe this level of 114.60, which is a double top. See, this is an important level. So people are buying euros, but I believe it'll be limited because if the euro rises too much, we'll hear from the bank of the central bank in Europe, the ECB, and they'll try to push it down. Okay, so at the moment the market is buying euros, but I'm skeptical about that. Question from Pan. Press today, Greek PM said trouble will be over in 4 years. Wow, should we make him head of the Fed? Yeah, that's a nice comment. Yeah, trouble will be over at some point for Greece. Many Greeks have just gave up and moved to other countries. Where I live here in Barcelona, there's quite a nice Greek community, so maybe trouble will be over for Greeks moving abroad. Trouble will be over for Greece. Depends if they get serious debt relief and investment to help their economy rise. But currently the agreements are just punishing them too much. And I don't see any hope unless the whole thing is revised until they get a real debt haircut and an investment program. And I think it'll be in the interests of Europe to keep Europe together. But that's, of course, a much longer story. Okay, Albert says, thanks, Yohay, for the good morning. To you as well, mate. Always nice to hear your opinion. Thank you very much. Yeah, and no one is buying euros, so why is it going up? Well, people are buying euros eventually. Okay, so let's move to the wrap. We're running out of time. I'm very glad for all your questions. Come every day, everybody. Bring your friends to the show and ask all the possible questions. We'll try to answer as many as possible. So this is the wrap-up of the live market open, October 9th. I'm Yohay Elam of Forex Crunch and Market Movers, doing the live morning show for FX Street. We had today recent developments were meeting minutes day yesterday. The BOE was dovish, the ECB was dovish, and the Fed was dovish. The Fed is getting no closer to a rate hike, and that had the biggest impact on markets. We've seen a rally in commodity currencies, and eventually it supported the pound and even the euro that broke higher out of range. Here is the very nice range of the downtrend resistance that the euro broke above. Okay, so these are the recent developments. In general, dollar sell-off against everybody except the yen. Only the yen is stuck around 120, and the rest are rallying. Good mood in markets. Oil is up, stocks are up. Everybody's cheering. Can it last until next week? I'm not so sure. Next week we have figures from China, and we'll have maybe another reality check. So what's on our agenda today? UK trade balance came out worse than expected during the show, so we have a small dip in the pound. Canadian job figures, that's the main event for me today. We're expecting 10,000 jobs gained. Will the rally in the Canadian dollar stop, or will it continue? Dollar CAD now is at the lowest levels in 3 months, under 130, well under 130. And we also have US import prices, which are expected to show more deflationary pressures, and 2 Fed speakers, one leaning to the hawkish side and one a clear dove. It's Friday before a long weekend in the US, Canada, and Japan, most importantly the US. That means we can have more movements, more volatility, more last-minute scrambling to close positions. Let's take a quick look at charts now. Well, after this dollar sell-off, we're seeing some kind of a retreat but euro dollar is still above downward resistance, 113.20. Pound dollar is a bit lower, and not anything critical. Dollar again hugging 120. Dollar CAD, big fall in the last week or so. Wow, it's even extending its falls now to 129.50. The Aussie dollar, also commodity currency, moved above the post-Fed high, also the highest since August. And the Kiwi dollar struggling with critical resistance here at 67. So we still have a rally of commodity prices. Will this continue? Will it not? We'll see in the last minute scrambling today. So that was the wrap for today. Let's see if we have just a few more minutes, 1 or 2 to answer another question. No, just thank you. Pan says thank you. I say thank you to everybody. We'll be here at the same time on Monday, 8 o'clock GMT, 9 in London, 10 here in the old continent. Wish everybody a successful trading day. Remember that it's also okay not to enter a position if you're not sure. That's also could be a good decision not to lose money. And in any way, trade with care. It was very fun being here, and we'll see you on Monday morning. So that's it for today, and goodbye.